Writer's strike could be nearing an end with both sides set to meet on Sunday. And Ken Griffin is still an absolute piece of shit. What is going on, guys? Lottery Stocks here. Welcome back to the channel. Welcome to the channel if you're new. Hopefully you guys enjoyed your weekend. Today we have a lot of stuff to go over with AMC. We're going to also touch on GameStop, but most importantly, prep you for the catalysts that we have this week that are going to affect the stock market. And do you remember that article? If I can find it, I'll post it up right here in front of the screen, where it said AMC and GameStop pose financial risk or something along those lines to the market. Well, that's going to come in handy for this video. But overall, if you enjoy watching, please hit the like button. It's free. It's just one click of a button and it helps me out tremendously. The subscribe button if you want to join us on this journey to financial freedom. Without further ado, let's get into it. So the writer's strike, one of the main catalysts that we're paying attention to for AMC in particular, which will also affect Cinemark, IMAX, but AMC is our play, could be nearing an end, and both sides are set to meet today on Sunday. So we don't have the full, is the deal going to go through, is the writer's strike going to be dealt with just yet, but it could potentially be dealt with today, but it also could not. Here is the latest as to what is happening with the strike. The major film and television studio on Saturday evening delivered their best and final offer to the striking writers. Now, there is a lot of hope that the negotiations are going to end these months-long strike and conclude with an agreement this weekend. Negotiators with the Writers Guild of America were expected to review the offer and deliver their response. This is the fourth consecutive day of negotiating, and in quotes, should a tentative deal be reached, it would still need to be ratified by rank and file members before it could go into effect. So we will know what is happening potentially by the end of today, but it still has to go further before going into effect anyway. Now, the other day we put up a video about Citadel getting fined $7 million, and it turns out the SEC also just settled charges against Goldman Sachs for failing to provide complete and accurate securities trading information known as blue sheet data to the SEC. Goldman agreed to pay a $6 million penalty to resolve the SEC's charges. Now, it seems as if the SEC is just trying to collect a little bit of dough right now, and they don't really care about these charges from either of the companies because the consequences in reality should be a lot larger. In fact, this one may not seem like a big deal or may be brushed off as smaller than Citadel's, but as Dave Lauer tweets, this Goldman action is serious. Almost half of all their blue sheet responses were flawed, which is 163 million trades. That's nuts, and it's a tiny fine. Yet another books and records violation that kneecaps regulators' ability to surveil and enforce the rules. No wonder why so many are fed up. If a firm can't keep accurate records, it shouldn't be in business. One of these days, regulators need to actually deter behavior rather than just make it a cost of doing business. So if the Citadel one pisses you off, basically getting away with guaranteed profits for 5 years, the Goldman Sachs one should also piss you off. $6 million and $7 million fines for 163 million trades. Even if they made pennies off of these trades, they still would have profited more than the fine. And before we jump into the week, there's not much to talk about for AMC's chart. As many of you know, I'm still watching that $15.30 level before a break, before any sort of substantial break higher on AMC. There is also a gap fill up to $19.47 and then a gap fill up to $37.52. Overall, if AMC sells off with the market, I would watch $6.15 to retest this descending parallel channel on Monday or Tuesday before going from there. Also, take a look at the box office. 2020 was $2 billion, 2021 was $4 billion, 2022 was $7 billion, and we are already basically at $7 billion for 2023, and we have a lot of money left to go towards the end of the year. This is beautiful. It shows that many people are going back to theaters and that these companies, these businesses are not dead. Shorts are absolutely not going to have a thesis going forward. Now, Instinet is a private exchange for trading securities that are not accessible by the investing public. It's considered an alternate trading system or dark pool. Dark pool trades are intended to reduce volatility by obscuring large trades. Instinet is Wall Street's oldest electronic communications network, or ECN. And here's something that was not shown to us. Instinet had $50 billion in DTCC waivers of the same Dodd-Frank risk deterrent charge that caused Robinhood to freeze buying on January 28th of 2021 for 2 years leading to and on the buying freeze same day. On the buying freeze, Instinet had $3.3 billion waived, which is $1 billion more than Robinhood. Instinet routes Apex Clearing's order flow, which is exactly what Webull uses. Continuous DTCC waivers built up a pattern of abuse where it became the standard business practice to expect respect the waivers, so Instinet remained thinly capitalized going into the buying freeze. Clearing firms were released of blame because the SEC said they had done nothing to warrant the charges, but that isn't true. It's also a registered broker-dealer under the SEC and self-clears. These are more blatant crimes that occurred during the buy button being taken away on AMC and GameStop that are just slowly becoming uncovered to retail investors. So shout out to Frank's Place for posting this over on Twitter. Touching on GameStop, also not much to talk about, trading at $17.18 before we start the week. I expected it to scale up a little bit, test this trend line right around $17.50 before descending even further. As of right now, with the state of the market, AMC and GameStop are still fishing for that bottom. We don't know where they are going to hold up. At least GameStop has supports. It's not at the lowest it's ever been. But as of right now, things are bearish until, of course, we squeeze. Now, the market is insane this week, and here are the key events. But before we get into that, a quick break for Moomoo. If you guys want up to 16 free stocks, each valued up to $2,000 per stock, a guaranteed Tesla or Google stock, and $50 sent to your account to trade with, use my link in the top of the description or pinned in the top of comments to download Moomoo. And once you sign up and make a deposit of even a penny, you are going to start earning benefits from there. So go to that. You also get access to free level 2 order book data, so you can see where whales are loading up and dropping off shares. Also access to trading options, going long, going short, viewing other exchanges, and more. So go do that, plus your money's insured. Also guys, pop in the Discord. I'm in there on the daily. We talk stocks all day long. Get in before the week starts because the weekends are usually quiet, so you want to get in now, Sunday night, before the market opens. I also post my trades as soon as I take them in Discord. Key events this week. Number 1, consumer confidence data on Tuesday. Also on Tuesday, building permits and new home sales data. And Thursday, we have GDP data for Q2, pending home sales, and Fed Chair Powell speaks. And then Friday, August PCE inflation report. And in total for the week, we have 6 Fed speakers. Very busy week, just as volatility has returned. Now here's what's scary. The S&P 500 has added $7.2 trillion in its market cap in its rally this year. However, the top 20 stocks have accounted for $6.1 trillion of that gain. This means that the top 20 stocks in the S&P have accounted for 85% of the index gains. Meanwhile, 5 stocks currently account for 70% of the NASDAQ gain this year, all while technology stocks now reflect a record of 25% of all equity fund assets. A few stocks have become the backbone of this market, which is a very, very scary thing to see, because if you see these AI stocks like Nvidia start tumbling, it's really, really going to hit the market hard. And U.S. national debt has jumped by nearly $1 trillion per month since the debt ceiling crisis came to an end in June. Total U.S. debt is now up $10 trillion since 2020, and to put this into perspective, it took the U.S. 232 years to add the first $10 trillion in debt. The worst part, the debt ceiling is effectively uncapped until 2025 in the latest debt ceiling agreement. Deficit spending has no limits until 2025. If we see a recession, we could easily see $50 trillion in US debt within 5 years. This is horrible and should get more attention. Looking at the S&P 500, it decided to break below that level right around 431.50, which is a scary thing to see, because looking at this going into the brand new week, we're not sure if this is a fake out to the downside under that support level, or if we are finally going to close that gap down to about 422.75, right around that zone, or 423. So expect the SPY to scale down to 423 if this is not a fake out. If we decide to pump, watch for a rejection right around 438.60 after filling that gap and then coming down even further. Overall, guys, that is what I got for you for today's video. Hopefully you enjoyed watching or found value out of the video. Make sure to have post notifications on, subscribe to the channel, hit the like button on your way out. Love you all. Lottery Stocks out.